children of planet Earth. Hello from the children of planet Hello from the children of planet
Yo, what's up, everybody? Good morning. All right, let's get ready to get rolling here. Upper band break. Looks like we did get that. Oh my goodness. Does look like we did tap that, huh? All right. Give me 1 second. I'm gonna grab my breakfast really quick. All right, it's time to get started. Last week I meal prepped a bunch of breakfast burritos. I made like 40 of these things. I made like sausage, home fries, eggs, all that stuff, rolled them up. Now I have something better than just my Jimmy Dean in the morning. Morning, what's up, fellow warriors? Whew, out of breath. It's cold now. What's going on? It's fall time finally. I know it comes late for Texas. It's now November. It's finally cold. My heater goes on for the first time last night. And Elizabeth being a maverick over here. She's shorting already. Look at her. Good luck to you, girl. Yeah, I'm in that same boat as you. I'm like, ugh. It's got to pull back a little bit, huh? All right. I agree. How y'all doing? How's y'all's week going? So no stream yesterday. I had tragic news. I gotta show y'all the picture. My streaming, my portable, which is my, I smash that like button, friends. Y'all give me a little love there. My portable trading screen, which is just like a touch screen portable monitor, right? It's like the size of a laptop. It's touch screen. I tie it into my regular monitor. I have two monitor windows, like my regular one where I trade on, and then the side one where I like run on the stream controls and stuff. Gotta have at least 2 monitors when you're streaming. You gotta go back and forth on the stream itself. If I were to like bring up my streaming control software, which is like, you know, this right here, you get that little infinite hall of mirrors effect. So I don't like to poison your retinas with something like that. So you gotta need a second monitor. Thing fell off the table and smashed. A big hole in the middle. It fell off the table, landed on something, and goes. So, I like a $600 monitor. I'm so sad. Monthly map's looking slightly better yesterday. I did see that. Let's take a look really quick at that. 3 minutes to market opens. Slightly better. Not the best, but slightly better. You can see that people are starting to step in and bring calls under the table here, right? I mean, under the price. Still liquidation possible for the next 3 or 4 days. So you can see that upward slope on the bull side and that same thing. So I guess Fed had like no rate change yesterday, right? As the middle of driving home. Like no change yesterday, correct? If I read the news correctly. Monthly map. So monthly map, right? Bull side sloping up a little bit for 3 or 4 days. So have bulls exiting positions. Bear side sloping down is bears exiting positions. So it's liquid, right? Liquid markets don't crash. So the market's likely to revert to mean more often than not when it's liquid instead of just collapse out. Now, general, as somebody wrote me the other day, it's like, I thought monthly map said we were selling off. And I said, yeah, from here, right? When monthly maps, we open up in the new month. Right here, monthly map shows a selling pressure, and it doesn't just mean that we sell off like straight down. It means that the trajectory is still bull liquidating. So like likely when monthly maps are showing that kind of trajectory there, highs will be sold, right? And that's typically what you see. But it's not like the market just falls out. I mean, even in the biggest crash years we had, 08, 2000, you know, markets move their way lower. Like literally 2000 looked just like this. It doesn't just fall straight down. The pressure is still to the downside. And so from here, when we got that new monthly map print that said, okay, it's not going to recover from here, we had 3 down days and now 3 up days, and now the market's starting to a new day. Let's see what we got here, y'all. So you have to just know that it doesn't just mean you fall straight down. It's showing how positions are going to change over time, right? Over the course of long periods of time. So our call was there was going to be selling pressure between now and the end of November's monthly expiration. Oh, VIX is below triple B right now. Okay. I'm behind. I need to check up on that. It's 27 in Georgia, Chase. Jeez. Oh my God. Good morning, Carmel. What's up? Morning, everybody else. Smash that like button, friends. Give it a go. Give it a punch. Outside DD bands already trading small, if at all. If you do anything at all. Just so you know, the small account, the 10K account is now at 10.4. I mean, the 5K account is at 10.4. So we've traded this well, 108% gain in about 3 weeks of time. I actually made a stat sheet just to show y'all the stats on the account because we don't print stats on Rocket Scooter yet. So I just did it in Excel. I went through all the broker statements, put them up. Okay, res is greater than 0, opening above the box. This is a bull gap and go setup. I don't know if I want to take it though. We're outside DD bands. I might take it light. I want to look for signs. The only opportunistic trade on this would be if there was a short setup to possibly take it. This is not a short setup. We have a gap and go on res greater than 0. We all see that, right? Res greater than 0. Okay, number 2. Res greater than 0 also supports here, right? What the heck? What just happened with my computer? Let's go back here. Oh, liquidity maps just popped up. That's what happened. I was like, what's going on here? Res greater than 0 supporting there. It's a bull long up. So like what I'd like to do actually is to long right here on res greater than 0. Right now, outside of DD bands, I don't like to make any real trade off of this unless I just long up the open and I can dive back in. But the idea that diving back into the half gap is already a 20-point drop. I don't want to take this trade and then long into this trade. So I'd rather miss this part and take this trade right there, which would be hedge pressure to DD, right? If we get it. Because it has 20 points with a 10-point stop, and we'll have a nice clean resilience probably if we get there. So the idea is normally in the normal bull long ups, you guys see me take them all the time. I would long here and long again and then ride it up. But with the 20-point drop, it's like long here, it's 20 points of drawdown. So I wouldn't want to like long and then stop, then long again. I would just kind of miss out on this little part here. What's up, Sean? Good afternoon, everybody. All right, let's go. Let's take a little analysis here and some other things. We got VIX below triple B, which is great. UVXY and a downward BRSU setup. Nothing good on volatility. I mean, nothing bad on volatility. We're clean there. So market's going to drift higher, probably still. As far as a short setup goes, I don't see anything to short off of unless res starts to give me a sign. Should probably find some. Let me try something really quick. Let me find some red lines. Try to. Oops, cancel. Hold on one second, you guys. What is the Windows M. No, what is the maximize hotkey? Thinkorswim's doing that weird glitchy thing where it... Oh, hell, I don't know. Where it's minimizing the taskbar. Let me see. What is the hotkey to maximize all windows? Is it Windows something? Windows up. That's what it is. All right. What it do? What up, Leonidas? What it do? What it do, man? There we go. Where you at? Okay, that ain't working. Oh well. I'll figure it out later. Let's try it one more time. Alright, let's close this down. So yeah, no short setup today. Missing out on the long if there is one. This is cool. Okay. So we're out the door. I mean, there's not a short setup on this one. Pretty easy to see. Could be a log from here to somewhere. I'm gonna kind of get some red lines so I can find them. Let me try this one more time. Maximize all windows. Windows and up. Okay. Try this again. Hold on one second, guys. Let me see if I do taskbar, Windows tab. So weird. All right. I remember I did this before. Thinkorswim is stuck in a minimized state with no windows. And I know I have to maximize it to get back up. Oh well. Windows D is to min everything to desktop. What's the max everything, Lee? I want to maximize all windows. Thinkorswim is hidden somewhere on my desktop and I can't find it. Like, the layout is gone. It just shows one. I can't even maximize it. I'm trying to remember on Windows 11. How does this work? Okay. Oh, here it is. Okay, move my over here. Here we go. Boom. All right, got it. I knew I did this before. You highlight the icon on the taskbar, the little window pops up, you move mouse over to the little window, then you right click and then maximize. Bam, let's go, baby. All right, let's try to get my, let's get some red lines going. This is what I'm gonna calculate real quick. So basically I'm missing out on the long setup because I don't really have a good entry point on it. I didn't want to take that little risk on the small account challenge to long in the gap and go. All right, so let's do some red lines real quick, everyone. Y'all love your red lines. Some downside runs here. Let's clean this up. This from our illiquidity pivots video, guys. Remember that one that we did? Really awesome video, right? So we're trading right about here. Let's go ahead and just mark a spot. I'm just gonna kind of estimate this really quick. Wonder if you can go that far back. We get some upside targets here. I got 30 days on this. Okay, this is a trick called illiquidity pivot. So we're gonna find some upside targets, right? Where are we trading to? All right, we don't have tick charts on this. So we're gonna have to estimate. Volatility small, volatility big and small. Okay, let's just mark it there as estimates. Okay, it's good enough. Normally you do them on the way down, and of course lazy me didn't do them, but I would consult with everyone in chat to make sure they have the right ones. On an estimate, this looks close enough. These are going to be our These will be our upside targets today. Okay. Just going to get really quick show how to do that. All right, so there we go. I'm at 43.20, 43.40. So these are anytime you're outside of DD bands, you look for these red lines to be where you're targeting to go to. Draw some upside ones as well. Teach y'all this trick. Yeah, today's a nice little bull run day, so this is good. And time frame, tick chart. This is a really cool trick. We had a whole class on this last week, remember? It's one of the best things you can learn to do in futures. Make yourself like a fight. And we don't have to tick chart on Thinkers. I mean, Rocket Scooter, so using Thinkorswim. All right, do the little candle shuffle. All right, let's go back. Yesterday. Actually, probably need to go to. Oops. Watermelon sugar, bring back them COVID memories. Everybody remember sitting outside your swimming pool, your back porch, eating tacos or crawfish or whatever your COVID DoorDash meal choice was, and listening to Watermelon Sugar by Harry Styles. That was like the COVID anthem for 2020. All right, so yesterday's move. Let's double check this one. A song totally about PG related things. All right, there's that volatility expansion decline. At least there's way down. Check this one out. Ba-boom. I don't know if I could ever live without watermelon sugar. Let's try this one. Just gonna mark a couple of these. Once any downside moves, we're gonna be smacking into them. There's your impact, easy to see. Y'all know the trick. Y'all know the trick, right? If y'all don't know the trick, say I don't know the trick. Give me a little insight on the trick. Had a whole video on it if y'all remember. I'll link you to the video. Chris. Okay. If you're in Rocket Scooter, the video is going to be in let's go all the way up. We'll check this really quick. Never tapped it either. Oh, okay, perfect. Okay, so we did have 2 impacts. Excellente. All right, so let's go ahead and delete this run linked anyways, because there's another impact there. All right. Perfect. Okay, so this little trick, these are pivots on the way back. If the market does fall off, these are going to be really solid pivots on the way back. So right now the market's just moving higher, so I'm just kind of doing a little, pre-market homework. Should have done this, a couple days ago when traveling. Okay, so there's a video in our Discord. If you guys haven't signed up for the package, the extended trial is something we're doing, which is like, actually no, we're doing like the spectacular thing. So you guys, for $20, you can literally jump into the $200 a month package. Okay, for $20, just for a month. Check it out. Here you'll go to our Discord. You'll be able to see this video. This video alone is worth $20. Click that, $20. Right, actually, for 1 month. Check it out. And you can use the platform, everything that we have, and go through the boot camp all in not first month. Okay. Some return targets today for these next couple of weeks if there's more downside. Or these are the bases for upside move. Okay, so this is what I'm doing here. A technique called illiquidity pivots. Reds and yellow lines are all the rage. Red line in. So what we need to do is mark a yellow line to the upside as well. Let me go ahead and zoom way out. What these are pivots that are based on illiquid moves, which are like rapid moves to the up or down side. Let's make this as far as we can go. Maybe 1 year, I think. Perfect. Geez, some spam calls are going to town today. Okay. All right. So let's make sure we have them all marked up here. 41. Oh, let me double check we didn't knock any of these out. Okay. We hit 41.20. Okay, so 41.20. Let's see what we cleared out. So this has been nuked. And this has been nuked. Okay, these are all old. I just keep record of all of these forever and ever and ever. Okay. All right. All right, so let's go back to Rocket Scooter and let me show you what I'm doing. Ooh. Let me just refresh real quick. My computer had a glitch again. My computer's acting funky. I'm connected. Let me just reset this. All right. You're pulling back a little bit. Okay, so let's go to the risk interval tab here and let's get the yellow line distance on the S&P. 245.52. Let me show you what I'm about to do. It's really cool. 245.52. I'm gonna draw a box of 245.52. It's a great technique, you guys. That number you get from our platform is a little exploit. We're gonna make the distance 245.52. Why is it 52? It needs to be round to the nearest tick. Let me. Hold on. Get the right. $245.50. Oh, okay. All right, it's $245.50. So it's just arbitrarily making a box of that distance. Now I'm gonna take this box. Is that correct? It's really long. Hold on one second. What did they? Let me double check. What was this one? 22. Yeah, so it's about the same as it's always been. Yeah, that is right. Make this a little thinner, just so it's like thinner. Double check it and change the length of that. Okay, so what I'm doing is making a box of this distance, and what this trick is going to do, hang tight for this. It's such a great trick. Friends, make sure to smash that like button and subscribe to the stream if you guys want to check us out every day. We are live streaming, so on a daily basis. All right, so these are upside targets on these moves. I'm going to show you where I put it. Anytime there's an anchor point, you draw that a distance of that exact number that's printed right here from the anchor point. I teach you the anchor point in the video. If you guys go to the video series, let me show you in the boot camp. So it's a start here, learn to trade. We have red lines and yellow lines. So let me show you where that is. Zoom recordings. Let me get the video for y'all real quick. Oh, you know what I need to do? Let me double check. And then I put it on here. I thought I did. Hold on. All right, let me get you out of the video really quick. Let me show. Hang tight. Market's pulling back. I'm waiting for like a decent long entry or short entry setup. Looking like resilience fading away. We might actually get a short entry setup. Okay, so let me take the. Oh, I don't think I. Let me edit this one then. Let's trim this. Trim. Okay. Let me edit and then publish it. That would be good if I actually publish it. Okay. Oh, they want me to upgrade. How much is Pro and Vimeo? Ooh. Oh, okay, I'll have to. All right, I'll have to edit it.
Anybody to come out the door, guys. There's really no. Future's the easiest way to.
All right, lead page. All right. Okay, whatever. All right, I'll get the video up there today. So what this is anytime, anytime you have an anchor point, you're gonna draw a yellow line, and that's this distance here. And what this does is it shows you where there's going to be a pivot on the upside move. So like if we continue to rally, right, that's the target I'm looking for. Like that's an upward target from this move that started a move. This is the final destination of this move in the futures world. So what happens is you can see that these yellow lines are like super solid anchor point. I mean, super solid pivots when you get to them. I've deleted the ones that have already made their way through. And examples are like these downside ones. I leave the boxes there for history. At this time, you can see how this is a pivot, right? I just measure it from that moment in time and I project forward, and then there's a very rock solid pivot. It doesn't predict direction or anything, but it shows you where volume and pivots will be. So here's an example. This is the move up, and then right here, you can see we got close and it was pivoting off of it. And there's an event that changed that. But in this particular day, you see how you get right up the edge and pivot. So if the market's rallying up into those, I know I don't long into that very far. So what I'd like to see is that we're in the middle of a run, which we are, right? So we're not in the middle of any one of these things. And let me draw another one down here, because I think we would have had like a little bit of a, I'm going to estimate, but it looks like here at the end of the day, we started one as well. Let's go back and correct that one, put an anchor there. And so it doesn't look like we have anything in the way to bump into, which is good. For consideration, anytime you're outside of DD bands, these are your exit targets, because we don't have a role. For most of our stuff, our pivots aren't done inside of, or most of our pivots are done inside of DD band, right? So what do you do on the outside? You look for gap fills on the index. You look for illiquidity pivots. That's one of the two major exit rules that we do use at that point in time. Okay, so there's another one. We're just going to estimate the bottom from here because I don't have any more granularity, but let's go ahead and start there. Bottom of that wick. Now these are estimates, of course, so let's go ahead and draw ourselves a line right at the top of the box, and this is your target for now. And I keep a history of them, that's why it's like a little messy. But anytime you're outside of the green lines in DD band, you're going to use, these are going to be where pivots will be as well from other moves. The dashed line is the downside ones, the solid line is the upside ones. And they're just always something you want to have in front of your face, like to mark them. We're going to call this December major, which is a thick one. Yellow line, December contract. I should say December 23. Let's keep multiple history of this, and I'm gonna draw one right here. And what this will do is it'll give us a little bit of actionability outside of DD bands. Usually inside DD bands, the band itself is the target, right? This is a cool trick. I'll edit the video today. Oops, 4369. Okay, perfect, and that's it. So now, inside of this realm, in a risk and reward sense, you know, that would be exit targets for today. If pretending, like wherever we exit, and if we outside the bands again, then those pivots are also there to utilize as well. So normally, like, see, here's a great example. Yesterday, outside of DD band, where'd it go? It hit the yellow line and pivoted off. Isn't that cool? Oh, this guy's just not making it up as he goes along. How cool that is. Here's one from a long time ago. The one we just did. Is that one we just did? Hold on, let me double check. Oh, these are old ones from like way long ago in the rally. Those are the ones that started all the way back here. From the 39.85 level, we drew these two lines there, and they sat there forever and ever and ever. And on the way down, we pivoted off of them. Months later, pivoted off of it. And then yesterday we traded to it. Isn't that beautiful? All right, that's what it is. It's your target to exit. And I love whenever I'm demonstrating them, it just plays out. Just so you can see it actually really does work. Now, you can't bet that it bounces or doesn't bounce, but it is your target when you're doing risk and reward. You commit to the trade outside DD band, there's your yellow line tap, and exactly sold off of that to the tick from 4 months ago. How cool is that? It's called illiquidity pivots, and it's inside of the exit rules strategy. Illiquidity pivots, red line, yellow line, illiquidity pivots right here. I made another video on the stream the other day. I'm gonna edit it and kind of put it here. Like, is a better version of or more detailed version. I'll call like illiquidity bits in general. So we have entry rules in the Discord. There's 3 different entry rules used. You know, the big 3, we call them DD, liquidity map, resilience. Exit rules. These are how I find exit targets, and they're very, very simple how to do this. And you got them. Gap fills is 1. Red and yellow lines is 2. DD bands himself is 3. Exit at 2 o'clock. Or am I missing something? 5, 6. Exit. Okay. So one of them looks like it's missing. It's odd. All right. There you go. 5, 5. And this is all in the boot camp in the Learn to Trade. The first thing you should do when you get here. So I'm trying to see if there's a good short setup today. I don't want to short into the rally, but I'm going to see if everything starts to deteriorate a little bit. Looking still solid. I don't really think we're going to short setup. Exit targets, right? Okay. All right. Does this really need to be here? I'll edit this later. Okay. So yeah, gap fills, DD bands, yellow red lines. This is a great way to find exit targets. Opposing walls. Oh. That's what's missing. Oh, yeah, illiquidity. I was like, there's got to be one missing here. Here we go. I'll come back and do this later. Where did that? I must have deleted it on accident. So you can exit it like the opposing walls as well. You know what I'm saying? It is 306. Like, opposing walls to move for LP. Let's just do this, actually. Okay. So let me show what this is. And this is just to find exit target state, because we know the market's going to go up probably. Like, where do we go to? That's basically it. So these are our exit target rolls, and these are basically, every day it's like it's going to be one or the other. It's like, I knew there were 6, and that's missing 1. Oh my goodness. Oh wait, no, that is there. Okay. Don't listen to anything I'm saying. Illiquidity. 106, 206. Well, I counted that one twice. Okay. Okay. Oops. Oh my goodness. Okay, that is 206. 306. So gap fills, liquidity pockets, DD band, illiquidity pivots. Five. Yeah, there it is. That's it. The number is sitting off 2 p.m. We leave the day, and then any VIX pivots. That's it. Okay. So on that note, let's just keep a look at what's going on. Market's still going to go higher today. So let's just analyze all the different exit targets here. Like VIX below triple B, there's no really VIX pivots on there. We have UVXY doesn't really have any pivots as well, and liquidity map. So null volatility today. We're outside of DD bands, so we need to figure out where our exit targets are. So we're gonna have yellow lines and red lines. We calculate those. So I'm just gonna translate them over here. So right now, 43.24 and a quarter. So I'm going back to Rocket Scooter, and I'm just going to draw 43.24 and a quarter today. See, when you have some time, you always should do your homework, right? And we'll get the next one. Just kind of have them there, ready to go. 43, 41 and 3/4. 43, 41. Good enough. Okay. So now we have some targets there for risk and reward if you do calculate. Outside of DD bands, of course, I trade very small with those red alerts there. I just don't have a really solid pivot to trade off of from here. It's kind of in the middle of the move. And while I do like it, I would like to see a better pivot to trade off of, for sure. They will be automated one day, yeah. And it's supposed to be 29.8. It says 31 on the platform. Where do you say it should be 29.8, Udry? This is, unless the calculation hasn't updated, where are you getting the reference to 29.8? I'll double check, but we did have a problem a couple days ago. We fixed it though. When you do web scraping of information, websites that you scrape public information from sometimes put in safeguards so you don't scrape their site. So there was a safeguard put in that interrupted our scraper, and we coded around it. It does sound like a great setup. Like here to red line, should basically be about maybe here to there. Decent setup with the stop back inside of here. There's another hedge pressure bounce. Now this is the only reason I'm doing this, you guys, is to get 2 different trade setups today. Here to there, that would be res greater than 0 trade, right? We know this one. And then here to here would just be hedge pressure bounce in general. This would be an exit all if I got it. It's about a 3-to-1 trade. So we'll see. I don't like to just chase momentum. I like to buy on a bounce. It makes it good. Your rational alerts are still green. If yours are, assume yours should be too. Alexander, make sure you're connected. Make sure your sockets are connected. We put out a new release last night, so if you're not connected here, then some of these won't show up. So new release last night is going to put training videos on the website. That's one of the things that came out. So we're going to get out of the linear Discord and put training back on the website. This is part of our new marketplace project. So we had it there before. We recently removed it. So on the website here, you're going to have courses. And your courses will be right there as well. Right here to show you again. You go to your dashboard. Here, there'll be courses. And they'll be listed in the order which you need to do them. Yeah, maybe log off and log back on. Monthly maps are looking a little better today. They really are. I appreciate you guys coming in and enjoying the stream every day. We love y'all to death. Make sure you subscribe to the stream and come more than today. Get fire here. Now, again, I'm not gonna lie. I love a little friendly competition between others out there. I'm pretty good at trading, so I would go head to head with anybody out there in the streaming world and have a little fun trading contest just for views. But y'all wanna watch somebody live trade? Full transparency, all the trades I make you can see, etc., etc. It's not a paper account, not a funded account, none of that nonsense. Real account, real money. Trading it up. I'll show you the account history. Oh, I made a Google sheet. Let's look at the Google sheet. Now we need to get like an account history thing in Rocket Scooter. We got to build it one day. For now, Matt did his own account challenge Google sheet. Okay, here we go. This is the stats. Papa Bear making his stats here. Okay, ready? Let me turn this up a little bit. All right, 5K. Again, I start off small when I trade. Here you go, you guys want to see these stats. Start off small when I trade. Try to just build it according to the risk rules that I set. I ratio the position size of the account. Finally, it's taking off here. All the days. So I was like, I didn't know what the streak was. I was like, I don't want to see the streak. But here's, in the last 2 or 3 weeks, I told you guys only lost a couple trading days since like the beginning of October. So I've been going pretty good. So total 19 winning days and 7 losing days. Win to loss ratio day-wise, not trade-wise, 2.7 to 1. Max run up to drawdown 4.3. That's the control position size right there. So what this shows is just the account kind of growth. Like obviously it takes a little bit. I'm very careful right at the start. I never drop below 5, which is good. Then finally got some run on this, so we're doing good. So now we're at 10.4. And I'm gonna track it, and that'll be my thing. My pretty little printout. Alexander shows all alerts are green after logging out and back in. What would you like to do? Are DD bands on your chart? Number one, quick question. Are the DD bands on your chart itself? Take a full screen screenshot for me and post it in tech support of the entire window and turn on open your status right here, bud, where the status is shown, and then capture that as well. And then make sure you have, highlight the risk interval just so I can see that you have everything, all the pieces here. There's gonna be something missing. Also make sure you're connected to your Edge Clear broker if you have Edge Clear. You need a futures connection to get DD band alerts. So make sure all those things are there. Oh, well, yeah, so, okay, cool, take a picture. You shouldn't have the alerts if you don't have futures, and they should not be there for you. And please take a picture, because what it needs to do is we need to remove the alerts. We have the futures accounts, data feeds that should unlock the alerts, but that's a great bug to find. Oh, did you find it? Did you find out, Alexander? So you zoomed in. Oh, okay, yeah. Yeah, if you don't have futures connected, you won't have the alerts. The alerts are just nice to have. requires futures data. And down the road, I mean, as we grow, the more you guys subscribe to the platform, the business grows, we'll expand what we'll have. Like more options, more brokers, more connections. Futures data, the only real quick and easy way to get futures data is to have a brokerage account with a futures broker. And they'll give it to you for like nothing. It's $10 a month API fee and a $1 a month top a book. So that is really helpful to have just as like automated DD bands. If you don't have that, you should draw them yourself. I mean, we print them here for you and you just come in here and can draw them yourself. So here's that setup. Do I want a long at the box or wait till hedge? I'd love to take a hedge long though. We'll see. Anything going long from top of the box was positive? Yeah, so that is an option from here to there, knowing that this is possible. Right. So yes, res is positive and doing pretty good. So yeah, this wouldn't be a terrible place to strike along from. Knowing, but the reason I'm reluctant is because this is about a 15-point drop from here to here. And res is 40, which is good. If it was like 70 or 80, I'd be more convinced. And NASDAQ at 10, it's good enough. But do I want to put in like 5 micros and lose 15 points on it? Or do I just want to miss out on this little bit of run to take a better setup? That's the question, really. So ideally, because these are good, the answer that you're saying is yes. If I was trade from there to there, about 60%, 70% sure on that one. I would trade it really small. Like I literally put like 2 to 3 micros on my budget of, I don't know, 25. Like I'd long a DD band with like 5 more. I'd long at hedge pressure with like 15. Like I'd hit it hard right here if I got it, because the R&R on this is just fantastic. Resilience, positive or negative, you know, a negative resilience here will break hedge pressure and I know not to take it. Right? So if you fall to here and res is still positive, I'll take the bump. And why do I know it's gonna be a really easy trade if I get it? Is because we're trading below triple B, right? So we know they're gonna have razor sharp pivots. So I'll know very quick if I'm wrong. Right? So I'm gonna wait for the setup. This is one of those setup days that I want to wait. I don't want to take momentum on this. So I think if Anne is still in her short, she might actually get lucky on this one, because I think we might pull back the hedge. I just have an inkling, a feeling of that, but we'll see. How do I get the windows clean with the URL info? Oh, well, let me teach you guys a trick in Windows. Haha, that's why I use Edge. You go down to the software help desk. You guys really should explore the Discord. Oh wait, you want to see that? It's top secret talk. And I got to get out here in 20 minutes because I have one of the biggest meetings of my life. 9:30 today. So we're working with an A-list vendor, one of the largest trading education companies in existence, that's gonna likely white label our platform. So you know, we gotta be on that today. Quick tips tells you how to do it right here. So we're excited that project's gonna be huge. You can bring all new indicators and tools to the Rocket Suite platform as well. They're gonna have their own version of it, and it's gonna just be massive and a huge thing. So hopefully so. Fingers crossed for us, because that's gonna be really awesome to have expansion of like all different tools and stuff, have more stuff. It's gonna be great. So here you do this. These are all the rules. Go here, quick tips, software help desk, and then there you go. How do you, yeah, that's how you get that's how you use the shortcut feature in Windows to remove the hyperlink bar, URL bar, and your favorites and all that from the top window, top frame. See, we all kind of little tricks here. Okay, back to the stats. You guys can just review really quick. Let me tell you some important stats. I'm going to try to put in some more stats in here, but the run up to drawdown ratio is very important when you're trading. This is one of your most important stats. It's how far you go. I'm using a day-to-day basis, not trade-to-trade basis, because I don't have the granularity to do that. So run up per day instead of run up, like if I made 2 intraday trades, I'm not counting that. So it's how many days you run up versus how many days you draw down. And so the ratio is if you draw like a box, which in your account goes up like this and you lose half, right? Your run up is 2, your drawdown is 1, the ratio is 2. It means you're going to fall half the distance of your run with the half every time you fall, which is great. If your run up to drawdown is less than 1, it means you blow up, right? You fall more than you. So if you run up 1 and draw down 1, if the ratio is 1, you lose as much as you gain. The ratio of 4.3, it basically means for every $436, I'm going to lose 100. That is the position sizing trick that I use using these. That ratio is phenomenal. Imagine I have to lose 5 days in a row at this ratio to blow up. Okay, and that's great with a win percentage. I don't even have a win percentage on here. Okay, win percentage, win day percentage. Mm. 73%. So winning 73% of days, it's going to be very hard for me to, I'd have to take a very unlucky streak if I'm losing 1 out of 4 days to lose 5 days in a row to blow up. Do you see how that works? So when you're trying to grow a trading account, these are the stats that are important. How far you run up before how much you draw down. This tells me with the amount of profit I get to the loss I take, which means position, this is position size and position control and risk management. It means for every 4.3 days I go up, or every $4.3 I make, I lose $1. So to lose $4.3, I'd have to lose $1 5 times at the same ratio. I'd have to go on a 5-day losing streak. And again, to repeat, at a 73% win rate, I only lose 1 out of 4 days. So for me to go 5 days in a row on these stats would be very improbable with this position sizing. That tells me my position sizing is great for the win rate that I do have. Y'all see how that works? So when you're tracking a growth of an account, you guys want to get funny. I mean, y'all watch me. I've done so many small account challenges. I'm meticulous about it. I've done those like with those trader funding programs. I did 3 of them in a row and knocked them all out. I got $550,000 of funded account. The first 3 of them that I ever did with no blowups, straight up, just ran to the finish line. Not even using them. Just did it just to do it. To show you that position control is the secret to making money or not losing the money you have as a trader. You're not going to always win. Now, my win rate is pretty high. Again, that's a Matt Cowart thing. I'm not bad at trading. I'm using Rocket Scooter only in all my trade decisions. And I sit out a lot of days. There's a lot of days that don't have any trades. I sit out when I don't like what I see. But control is everything. And I'm very tight until I start lifting up off the account. And then I follow my position rules. And that's exactly how I do it. The DD band is 426, though. Would you plan on trade right through it? Yeah, that is the question. Back inside a DD band, I'd be willing to trade heavier. That's why I was telling you guys down here I might get into like 15, or because we're back into here, light will be yellow, right? Yellow light. So outside the band, it's just throwing a couple micros out of it, right? Okay, so making no trades just yet. And Q made it back to upper D's. Oh, nice. So Q's fallen down inside of here as well. Let's double check monthly map on SPY. Who here is not a Rocket Scooter member yet? And look, the monthly map is starting to heal itself now. It's starting to look actually pretty good. And this is actually double bull setup, which I love. And I don't think I see any short setup anymore. Monthly map is kind of stabilized a little bit. Not a terrible idea in that 4,300's kind of pegged pretty good. I should have probably bought at the box bounce, but that's okay. I do have a meeting, so I might just sit this one out. Yeah, I will sit this one out. Oh, not a member? Awesome. Well, not awesome, but you could be. Let me show you really quick. Everybody does, this is gonna last for 1 more week, so everybody go and do this, okay? Our full package that you get all the unlocks of the platform and the education and all the data feeds and everything it's normally $200 a month. We usually have specials that make it close to 100. So, but right now, it's like, if you wanna just check it out for 1 month, I invite everybody to please do this. If you haven't been a member before, literally $20, that's it. And you unlock the full thing. We used to only do Pro unlock, now it's full Pro Plus unlock. Full, that's everything we have. And it's only, no obligation, no contract or nothing, $19.99. You can check it out for 1 month. Everyone do that, and you should come to the boot camp class today and learn. For $20, not a terrible idea to just check it out. You're gonna save $180. And if you like it, chances are you'll get the next coupon, which will be about $100 if you stay with it. Which gives you all the data feeds, all the access, the platform, the tutorials, the Discord bots, all that stuff is like in one bundle. But I want you guys all to check it out. Do the $20 thing and then come to the class today and we'll show you how this all works. Oh yeah. So Chris, these are called illiquidity pivots, and they are in the exit targets rule. So make sure everybody that's a new member, do me a favor, and I'm going to repeat myself a lot because I want to make sure that the understanding is that you're going to have to do this. Everybody has, and don't rob yourself of this because this is really what you're paying for. Start Here, Learn to Trade in Discord is also going to be in our website starting tomorrow. Or maybe later tonight. We're putting the videos on the website too. This is your curriculum. You're going to basically want to learn what these things are. You're going to learn entries, exits, risk management. Let me just move these on here. Cheat sheet. So curriculum, I'll have, these are entry rules. These are how to use the 3 major indicators we have: DD, resilience, and liquidity map. These are big 3 indicators. The next one is your exit targets, which are going to be your illiquidity pivots here. So what I recommend is that at least 1 through 3, like everyone knock those out. These videos are very concise. They're very on point. They teach you each one. There's 3 ways to get into a trade. There's 6 ways to get out of a trade. And the risk management is like position sizing around it to get those cool stats that I have. Like how much to trade, what the lights mean, how to trade small, how to sit out, things like that. If you go through the boot camp 1, 2, and 3, you can do that in that first month even so. You're going to come out a champ. You're going to learn so much about trading. Your head's going to spin. Like how, not just trading, not like indicators and stuff, like trading, like physically trading, the act of betting, how to bet small, how to trim a position, how to add a position, where to add again, where to cut, the actual art of trading. I don't think I've ever seen a class ever by a trader on YouTube that teaches actual trading. They teach like indicators and indicator signals. Buy here, that's it. Okay, or sell here, that's it. Trading is like when to fold, how to cut your position size. It's position size, management, cost basis management, exit target, entry targets, risk management is the whole gambit of all of that. So learning to trade, like our boot camp is teaching you how trading works. Swing trading, day trading, scalping, all these pieces, what they all mean. Boot camps could be at noon Central. So the red lines are illiquidity pivots, and the takeaway from those is that anytime you're outside of these, so when you're inside of the DD band, typically the band is your kind of pivot point you look for. Anytime you're outside of the band, you got to find another target. We don't automate this part yet, but red lines are the next run pivots that we go for. So like if I were trying to short right now, I would short off of something, right? I don't short arbitrarily thinking it's going to fall. If I wanted to take a short, I can short from there. I can short from there because I know those are pivots. I can short on a break from there. Hedge pressure. So what I'm doing is I know that I have a run of this distance. Why would I long or short in the middle? either went long from something to something or short from something to something, right? So the idea is that all things you know that can create volume pivots, we mark them up. All right, you guys, I don't think I'm gonna do anything. I think market's healthy enough to make one more attempt to there. I might actually even try to play it some downside there. My other idea is to trade from here to there, obviously. Oh, you might run into that, hedge pressure balance. So we're kind of trading in the middle of two different ranges. I mean, trading in the middle of one of the two ranges I see. No actionable pivot on this one, which I haven't really taken much action. The market's just kind of moving on. What's the conclusion for FOMC? There's not going to... Essentially what happens is this, right? The FOMC needs to raise rates really quickly and really high to get inflation down. But the higher they go in a period of quantitative tightening, you have to think of the two things. You're in QT, so you don't have the liquidity in markets we normally have, and we have rate hikes coming. Those are both very bearish. If they continue to press further rate hikes, Wall Street perceives that as bad, and they sell the market. When they sell the market, people get laid off, so unemployment goes up, right? So people are going to get laid off. If unemployment goes up with inflation higher, that creates a period called stagflation. And so what the Fed wants, yeah, I'll have to just write this down if you want really quick. Fed wants quantitative tightening, which is letting assets roll off their balance sheet. If they also want rate hikes to control inflation, both of those are perceived bearish by Wall Street. We're going to sell the market. The problem is if we sell the market too hard, then there's a point where unemployment is going down. And there's a threshold to where the market's selling off so hard that companies are going to lay people off and unemployment goes up. If the rate hikes are there to curb inflation that's present with unemployment is equal to something called stagflation. Stagflation is bad. It's really hard to cure. The best cure for stagflation is quantitative easing. And the Fed comes in and buys up assets at the dip and floats the stock market and raises things back up so people get their jobs back. But the Fed wants QT. They don't want to bail us out with QE, so they're not going to raise rates too fast to trigger panic in the stock market. That's exactly what we have right now. So the Fed, to maintain their status of QE, is going to inch rates along and maybe even cut rates to try to drive the stock market from collapsing and just letting the stock market naturally recover as people get their jobs back and the economy slowly heals. And he keeps calling it the soft landing. The soft landing is, as long as the stock market looks bad, the Fed is going to do very little to rate hikes, because in the middle of QT, they're not going to push too hard on the stock market. They're not going to drive the car so fast that the wheels fall off. But if we start rallying, let me tell you what's going to happen. If like the S&P, like here's the big old sell-off, right? And here's the dip, and then we start rallying and keep going. If we start breaking highs and going, you're going to see the Fed raising rates 1-2% at a time. We get the rate at least 10 or higher. At this mode, when Wall Street is healed and the economy's healed and we're blazing through, it could be just like 1996 to 1998. In 96, in Clinton's second election, we were actually cutting rates into the election, and then the market started rallying into the tech bubble, and while we were rallying, they were raising rates like crazy after the election, and the market didn't care. So the idea is to get the market rallying to where the market doesn't care, and then just nuke interest rates, or nuke inflation with high interest rates. This, the Fed is like committed to cutting rates next year. They keep saying, okay, yeah, that's going to be next year. And the stock market's going to heal itself up. There's that dip, and the stock's going to rally a little bit. And then Fed's going to turn on the afterburners. like 2 years from now, and we're going to be in a period of 8, 9, 10%. You can call it. I called that 2 years ago. So it's because they want to maintain quantitative tightening without crashing the stock market and curbing inflation all at once. And that's the way to do it. Drive the stock market by playing with the unemployment situation. They want to get people fired to bring inflation down. They want to heal the stock market to get them back in their jobs. You do that push and pull, wages are going to come down naturally and inflation will come down. That's what they're doing. Hey, what up, Jeff? I wrote you back today, brother. Did you get going? Good deal. Can you do anything in Discord to get access to the Zoom calls? Nope. Just join and connect the Discord to your platform, and it should automatically connect you. Connections, tab, Discord. Glad I caught you, man, and I was able to get you in. All right, you guys. I'm outie. Love y'all. No trade today. Just wait on this one. I'll try my Discord if I actually do anything, but I think I'm done. I gotta run to this meeting. You know, sit out. Didn't find a good pivot to trade off of. Probably should have longed up the box a couple micros, but I knew I was going to be gone after an hour anyways to this meeting, so I don't like to be in a trade when I got to be focused on other things. That's a good rule of life. If you got a big meeting at work, if you got to be in a trade, make sure it's a set it, forget it with stops, or you got your hedges in. But day trading and scalping, I'm okay missing out. Open to have DD bands, I would have traded small anyways. Could have fought it for an hour for a couple $100. Didn't really care to do it. So we'll see y'all tomorrow. Love you guys. All right, and Jeff, if you need anything, just hit me up in Discord. Make sure you guys connect your Discord. Remember, $20 a month to try out for 1 month. All the tools here. And we'll I'm really glad to offer that to you guys. So you know you'll love it. Everyone usually does. Okay, we'll see y'all later. Sure you subscribe to the stream on your way out, and we'll see y'all tomorrow.